Hello, fellow traders. 'Tis I, the Rumpled One. It's Sunday, June the 2nd, the year 2019. Let's talk trading. We've got the weekly open and gap, and we also have the monthly open. So we're starting off June with money and risk management in place, right? I'm going to make sure you traders out there always remember and never forget your money and risk management. Okay, you can see we gapped down on the euro yen and we filled. We have 1, 2, 3, 4 open gaps. So there's still some play left in case you want to hop on those weekly open gaps. And we open below the daily previous day's midpoint, as you can see here. So right now we're green, so we're up for the month, up for the week, up for the day, but we're still 442 pips below the yearly open. And you can see here we're putting in today's range. This was the first day of the year. You can see we're 255 pips below the low of the first day of the year. First trading day, that is. And once again below the opens. And tomorrow I will have to change this to make it 2019 602. Actually, I guess I could change it right now. I'm thinking about it. Let's see. That's the plot by date indicator. And we want to change that to 2019. Next. So, interesting. It's not showing. I guess it'll show tomorrow. Oh, this is interesting. I just noticed something. It's not 602, it's 603. It's Monday. That's what we need to change it to, not Sunday. So there you go. And we'll do the same thing for the ranges. And you can see what happened with the latest inside bar. US CAD had a daily inside bar 2 days ago. See, we've got some inside bars here happening on the week, and then there's some on the month. So look to trade those breakouts. As you can see, it's early on a Sunday/Monday. Not much action, not much range at all. That being said, you can see here the holo. We did have some action off that highest open and some off of the daily lowest open, but not much. So we're still early. Buy zone. You see this pivot right here. So far we haven't hit it, but we definitely have a strong bias. So had you taken that trade, it gave some pips, but there's more pips to be had. So look, possible for that pivot to get taken out. Rat zone, of course, 27 pips. There's no rat trade. Once again, missed a pivot. Weekly pivot, 121.59. See if we can hit that weekly pivot this week. So that would be a long from this area. And there's the missed pivots. We had 4 missed pivots last month. Price action started out with a 3-ball on the bottom. And then we have a nice trade here. There's a pro trade to start off. Then a nice trade good for 10 or 20 pips. Wick zone, price is in the wick zone. You know what happens. Price enters, price likes to exit. And using my favorite, or one of my favorite trading screens. It's hard to say what my favorite trading screen is, but this is one of them. Just taking the crosses, horizontal line crosses. And as you can see here, not much happening at the tick level. Einstein line, called a couple of shorts there. But you know, we have a bias to the upside, so pretty much ignore the shorts since we've got that pivot and the weekly pivot that need to get taken out because they usually do. Here, simple weekly open. Oh, and I was showing this. We should probably put this back on the euro yen. Showing which way is price going. If it's taking out highs, it's going up. If it's taking out lows, it's going down. What could be simpler? You see, we got a couple of. I've also marked some inside bars, just so you can see here. And this is an indicator I think I picked up probably back in like 2008. It's just called in and out. Somebody else wrote it. Yeah, 2006. But it's just one of those simple indicators. You can display inside or outside bars. I just like to display the inside bars. So you can see here, if you took that breakout to the upside and to the downside, it paid off. We're at the 00 number here, so possible long entry crossing the 00. Once again, showing the opens and the range, looking at the ATR, looking for price to get in one of these zones. Back there. So, fellow traders, I'm trying to think, were there any questions? Yeah, somebody wanted to know if they could use my indicators on the indices or my methods, and yes, you can. But I told them they need to run the frequency distributions to see how price reacts, because I don't know what indices they want to trade. And so, for example, if you wanted to do a buy zone on an indice, you need to find out where that sweet spot is. So you need to run the high to open and open to low frequency distributions, and you'll see if it moves X number of points or pips or ticks or cents, then chances are it'll move so many more. I learned that with the stocks. You know, there's some stocks, I call them the cows. If they move, 10 to 20 pips, chances are they're going to move 50 pips, or I'm sorry, 10 to 20 cents, they'll move 50 cents or more. And so I look for those stocks that have that characteristic, and those stocks are the ones I trade. So I don't try to use the same tool on all the instruments. So like, I like to trade this euro yen pair for one. I like to trade the dollar yen pair only because dollar yen because of how it moves and how they trade it. Very disciplined. It takes out those pivots more often than not and things like that. So for example, maybe you want to use pivots on the indices. Well, you need to see what's the frequency that they take out the pivots. So, I mean, all of my trades are statistically based. It's not shooting from the hip, and it's not running some curve fitting back test where I keep adjusting the numbers. It's just like, no, I run the statistics on this frequency distributions, and they tell me what price is done over the last 100 days or 1,000 days or 1,000 hours or whatever time frame I'm testing to see. Possibly you might want to do a wick zone on indices. Well, then again, you run the wick zone indicators that say how many times price doesn't close in the wick zone. How many times does it close or run above or run below, and what's the distance? Just things like that. You just have to do your homework on those. So I hope that helps. Now I was trying to remember if there was another question out there. I can't remember. I think that was the main question I got. But the thing is that you really just need to study what you're trading, find out, the characteristics, and then you can go for it. So for example, this buy zone here, I know if it gets in there, I've got confidence. You see here, it went above for a few ticks. It went up here for a few ticks more, or pips. And, that's the confidence that I have. And I know from that other chart, where is it? Well, here's one. But the buy zone, there's that pivot right there. I know how often that pivot gets taken out. So I will use that bias until that pivot gets taken out. And then once again, we were looking at the pivot chart, and you see the weekly pivot here. Well, check this out. Let me put this on H1. We've got a monthly pivot of 122.39. So look to see if those two pivots get taken out. I mean, we can switch the time frame here. On the weekly, you can see we've only had 3 missed weekly pivots. And for the month, this year, we've had 2. Well, this one, of course, we haven't hit it. We didn't hit last month's. So let's go back to the weekly. Well, let's not count that one because that's just today. We're just starting out. And so right here, you can see we've got a couple of pivots. Only 2 missed this year, 2 missed last year, none in 2016. So once again, weekly pivot, very strong trade. Once again, how can I say this and place these trades? Well, if I have my risk management in place, I know the most I'm going to lose on that trade. So I'll either lose that or I'll get somewhere close to this pivot. It doesn't have to actually hit it, but that pivot's how many pips away? Right now, 60 pips away. That's not a bad trade, right? On the daily, we're 34 pips away. So once again, I have the confidence in taking the trade because I have my stop loss in place. I know the worst that can happen. Now, that being said, remember, these videos are for educational purposes, and your results may differ from my results. But by placing a stop loss, unless there's some catastrophic failure and your computer goes down right when price is crashing and you didn't have that stop or blew through for some reason by a couple hundred pips, you know how much you're going to lose because you set your stop loss. And you see, that's why I say it's not what you trade, it's how you trade it. So it's June, first trading day. Let's drain the banks this month.